Well, today is December 16th, and we just had this big rally in the market yesterday. We believe it was kind of this thing called the Vanna unwind. The Fed basically didn't blow up the market yesterday, and so by default, we had a lot of puts that lose value. Implied volatility comes down, and the market rallies. And so if we pull up the S&P 500, you can see that yesterday it had this giant move up, and it more or less stalled in this spot. And there's a big options expiration tomorrow, that is December 17th, wherein 40% of total S&P gamma expires. And so if you think about positive gamma as a mechanism to constrict movement in the S&P 500, when 40% of that goes away, well, then the market should be able to move around better next week. And we call that elevated volatility. Some people assume that means that the market will drop, but we just think it's giving it the space it needs to move. And along with that, there's a lot of single stocks that are set to expire. Now, obviously, many stocks have been crushed over the last several days and weeks. And so what we wanted to do is play with some ideas around how do you find some names that maybe are sold off and just can't seem to catch a good footing, but may catch a bid because of options expiration. So what we've done here is we've built this little spreadsheet, and we found some names that might be kind of interesting because they have a lot of put deltas expiring. And so the idea here is that if there's a lot of put deltas, that means there's a lot of puts that are in the money, and that's pressuring the stock down. And when those puts expire, not only can market makers buy back possibly some short shares that they hold, but also just the negative gamma of kind of tied to the trading of puts and the movement of puts. That pressure will just be alleviated, right? And so you might get a bounce in these names just as a function of the fact that these puts are wearing away. So what we've done here, and you can see this, we have Disney, Delta, AMC, Hood, and Palantir. Those are some of the more interesting names we found, but Disney caught our eyes, probably the most interesting. So what you can see here is that it has 1.6 billion notional of puts expiring in Delta terms tomorrow versus only 300 million in calls. So that's about 1.3 billion in puts, which is 67% of average daily volume if you look at it on a stock volume. So, you know, obviously you can't tie one-to-one back, but that seems like it's a lot of stock that could potentially be bought back in Disney if those are short shares, and just pressure that's alleviated. Now, some of these other names, Delta, AMC, not too big with only 30%. Hood's pretty large. Palantir only about 40%. And we actually put it together another spreadsheet just to make this a little easier. You know, Penn is a stock that's been getting crushed. That only is about 34%, not too big. But the other one that caught our eye here is PayPal. So I want to look at, if you flip to our equity hub, you can look at over 3,000 different stocks in this tool. And what it shows you is how gamma is positioned, right? What are the options positions in the stock, and how might that impact the stock's movement? So let's first take a look at Disney. And what you'll notice here is there's two lines. There's the orange line, which is the put gamma. There's the blue line, which is the call gamma. And the fact that the orange line is below the blue line is telling us there's more put gamma right now than call gamma in Disney. Puts are dominating the movement of this stock. Now, this is not an extreme example. You could look at maybe AMC as a more extreme example. I could show you that in a second. So if 50% of Delta is expiring, this orange line should effectively get wiped out. And that might take the pressure off of the stock. So we're trading around 150 right now. If we look at Disney on a stock chart, you can see it's trying to find a bottom. It's well off previous highs. And now these put options are going to get pulled. And that could really put a bid in the stock. It's kind of an interesting idea. So we like the idea of buying Disney into options expiration. Again, this is not financial advice, just something interesting to consider in your research. The next stock that we obviously pegged there was PayPal. So let's see the chart there. You know, this is the same situation. This stock has just been pressured relentlessly over the last several weeks and even months. And if we look at the equity hub curve, what you'll see is a very similar view to Disney in that it's put dominated, not by much, but the fact that a lot of this put position, again, about 33% of the deltas that's in the money puts are going to be wiped out. And that notionally is about half a day's worth of stock volume. So that could put a bid into the stock. Not only that, if you look at how steep this line is, how vertical this line is, what that's telling you is that there's a lot of obviously gamma in and around this price area, and that means there should be a lot of volatility. So you get these options expiring, put options expiring, and that could really kind of finally give a pop in the stock and push it back over the 200 mark. And then finally, let's just take a look at AMC so I could show you kind of what a real put-heavy name looks like. You can see here how big the gap is, the chasm is between the call gamma and the put gamma. And this tells us that there is just this really big put position that's been pressuring AMC. We did an AMC-specific video a couple days ago. You can find that on our YouTube channel. where we dig into the stock a little bit more. Now, it is a big delta expiration, but again, if you look in terms of ADV for AMC, it's only about 1/3 of average daily volume. So there's a little buyback there, but again, some of the other thing is the fact that just these puts are not going to be pressuring anymore from the gamma hedging perspective, and that might help a little bit with the bid. And then the last one, let's just take a quick look at Delta Airlines. The airlines are interesting because of the Omicron news. Obviously, airlines are probably going to be one of the first names affected by a real outbreak or another wave of fear in COVID. And so, again, here we're kind of put weighted. About 69% of the total deltas, which again are put weighted, are going to expire. This is going to leave an interesting setup for the stock, which has also been beat up over the last several days and weeks if we pull up the chart. So a lot of these charts have obviously very similar patterns. Big put positions are going to be expiring, and this may actually, especially if we get a more macro Santa rally, these names in particular may catch something of a bid. If you're interested in learning more about SpotGamma and our tools, you can head over to spotgamma.com, hit subscribe now, and you can get a free 7-day trial. And we also want to mention that we just launched a new training course called the SpotGamma Academy. If you head over to academy.spotgamma.com, you can sign up for that course, and we can take you through everything from what is a put and call all the way up to how to trade the advanced Greeks like Gamma and Vana. If you found this interesting, please let us know in the comment section below or send us an email at info@spotgamma.com.